much, Michael, and welcome everyone to CPA Australia's webinar, Cybersecurity and the External Audit. My name is Claire Grayston and I'm the Senior Manager, as Michael mentioned, for Audit and Assurance Policy at CPA Australia. Now, we have people joining us from all over the country for today's webinar, so I'd like to take a moment to acknowledge the traditional owners from around Australia and to pay my respects to elders past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. I'd also like to acknowledge that today we are joined by CPA Australia's President and Chairman of the Board, Merrin Kelsall, FCPA and Deputy President, Professor Dale Pinto, as well as Board Director, Louise Cox. So thank you all for joining us. Now, cyber attacks have been an increasing threat to business, and the impacts of those attacks can cause significant disruption and damage to businesses, as well as to their customers and suppliers. The need for adequate cybersecurity has never been more important. Our speakers are going to explain what this means for external auditors' work, what they can expect from clients with respect to cybersecurity, and the impacts of any cyber attacks they need to be looking out for. This webinar will comprise 3 presentations from our expert speakers, followed by a panel session where your questions will be answered. So during the presentations, please do submit any questions you have through the Q&A function and direct those questions to all panelists, and we'll pick them up in the panel session. I'll be assisted by my colleague Jana Schmitz, who will be monitoring your questions as well. For any troubleshooting queries, please do send a message in the chat box to our host, Michael, and he can address those for you. So it's now time for our session to commence, and I apologise for the earlier delay, but we're all good to go now. So I'd like to introduce our 3 presenters. First of all, I'm so absolutely delighted to have Kathy Armour joining us today. She's one of ASIC's commissioners. Kathy works closely with ASIC's teams responsible for regulating markets, market intermediaries, and the enforcement of laws relating to market integrity and corporate governance. She also focuses on the work of ASIC's Innovation Hub, which supports fintech and regtech activities, and on ASIC's work supporting cyber resilience in our financial system. So Kathy will provide an introduction to cybersecurity risks for business. Our second speaker, Rodney Piltz, is an assurance partner at EY with more than 30 years experience. Rodney is also the managing partner of the EY Melbourne office and leads the digital assurance team, responsible for driving the use of a broad range of technology solutions by the assurance practice in the Oceania region. Rodney is also a board member at the Australian Auditing and Assurance Standards Board and the chair of the AUASB's Technical Project Advisory Group. Rodney will give us his insights on cybersecurity risks for business, their impacts on external audit, and share the work of the AUASB Project Advisory Group and what they've done in this space. And then our final speaker is Ben Jang, who leads the Victorian Auditor General's Office Data Analytics and Systems Assurance teams. Previously, Ben led the Queensland Audit Office's first data analytics unit and also worked at the Australian National Audit Office. Ben brings together expertise in both accounting and IT. Ben will present on responding to cybersecurity risks on audits of financial reports and share practical tools and tips for auditors in assessing and addressing cyber risks and cyber attacks. So now I would like to hand over to Kathy Armour to start today's webinar. Thank you, Kathy.
Thank you very much, Claire. And I do apologise for the technical issues, which I think are somehow gremlins in the system at my end. I hope everyone can hear me well enough. So thank you very much for inviting me to join the panel on this really important topic. And as you all know, ASIC is Australia's integrated corporate, market, financial services and consumer credit regulator. This means we have a regulatory role in how companies and their directors operate, how financial services businesses and markets operate, and importantly for today, how financial reports are presented and how auditors operate. So we are very focused on the work of CPA Australia's membership. The changes to the way we all work over the period of the pandemic have been characterised by an increasing reliance on digital ways of working. This step change in the use of digital solutions increases the opportunity for malicious actors to disrupt firms and markets. For example, ransomware attacks increased 15% in the financial year 2020-2021 and cost the Australian economy an estimated $3.5 billion in calendar year 2020. So our message for business is that every firm and all of its staff need to take responsibility for improving their cyber resilience. This requires businesses to commit to assessing their cyber security, develop appropriate strategies to improve their cyber resilience, including having in place effective tested planning responses to a cyber attack. ASIC's corporate plan, which was released a month or so ago, highlighted that supporting enhanced cyber resilience and cyber security amongst the businesses we regulate is one of our strategic priorities. Now, what does ASIC expect of business in this area? If you go to our website, which I hope you are all very familiar with, and search cyber resilience, you'll see that we have a dedicated section on cyber resilience, which does provide resources that might be useful for firms to access to improve their cyber resilience. And it includes information on how to report a cyber incident and to whom. Now, I know my colleagues on the panel are going to provide useful and very practical information on building an effective cyber resilience program, but I hope my comments will give you an insight into the broad regulatory expectations that ASIC has. Now, as a result of supervision work we've done with market operators and market intermediaries, we've identified a number of good practices for firms to put in place so that they have adaptive and responsive cyber resilience processes. There are 11 key good practices that we've identified under a number of themes. And this detail is on our cyber resilience page, so I won't go on our website, so I won't go into it in chapter and verse. But I thought I'd highlight the themes we've focused on. The first good practice is really related to cyber strategy and governance. Really good cyber security programs were characterised by board ownership of the issue and responsive and agile governance models. We expect board members to be educated in the language of cyber resilience, and we've developed a set of questions for board members to consider when evaluating the cyber resilience within their firm. In addition, we expect that boards are ensuring themselves that there are adequate insurance processes in place, so they are satisfied that critical business can be reactivated if and when an incident occurs. Another good practice is having in place governance arrangements that are responsive. That is, they adapt immediately to reflect the changing cyber risk environment. In addition, we see that it's important for cyber security governance to be aligned with an organisation's overall governance framework. Cyber security is not just a question for the IT guy. We expect that firms have a really good focus on the cyber risk management and threat assessment, to think about intelligence gathering using third-party experts, and have undertake routine threat assessments, including of their third parties like cloud providers. And I know this is an area we'll hear more about in the other panels. A further good practice that we expect people to focus on is third-party risk management. Many firms have developed risk-based assessment methods and tools to ensure that third-party suppliers and partners are regularly assessed to guarantee compliance with security standards. And some organisations also use external service providers to carry out periodic assessments of partners and vendors. And a key good practice is having in place effective systems for collaboration and information sharing. Often this is confidential information sharing arrangements, and that is fundamental for organisations that are intelligence-led to help them understand attackers and potential threats. Further good practice that we focus on is having good asset management. That means, effectively managing the key organisational assets, often through centralised management systems for critical internal and external assets like a firm's software and its data. And importantly, this also means a really strong focus on staff awareness, education, and random staff testing on cyber matters. And of course, a key good practice is having in place the appropriate protective measures and controls. And I know this is a matter that the other panellists will talk about, but these are things like the implementation of the Australian Signals Directorate strategy to mitigate targeted cyber intrusions. And finally, of course, a key good practice is actually having adequate response and recovery planning. Response planning for cyber risk is different from the standard business continuity planning because the scenarios that you're likely to incur are not as predictable as other business continuity issues. In part, this is due to the range of threat sources, but also to the speed at which the sophistication levels of attacks are changing. And we observe that better practices in this area include routine and detailed scenario planning, wargaming, proactive reporting to the board, and really well-developed communication plans. So what are we doing at ASIC to ensure these practices are adopted by the firms we regulate? Well, in short order, we are supervising firms with a focus on their cyber resilience. This happens in a number of ways. First, ASIC's working in close collaboration with other financial regulators to review, align and coordinate our cyber supervision activities so that we're going to be in a better position to achieve good outcomes for jointly regulated entities and across the financial sector by sharing resources, skills and knowledge. For example, the Council of Financial Regulators is developing a cyber incident response protocol and is engaged in a project to realise an industry-wide cyber resilience testing framework. We also provide input to Home Affairs on the proposed cyber regulation for critical infrastructure entities. But secondly, and I guess more pragmatically, we're monitoring cyber resilience of key market operators and intermediaries and conducting cyber resilience self-assessments more broadly across market participants. In the future, we're going to be rolling out these self-assessments to other groups and firms that ASIC regulates. We published the findings from these self-assessments. Our last report was in December 2019, and we plan our next update by this year's end. Finally, we take action where we believe there's been a failure to have adequate cybersecurity systems, because that can amount to a breach of many of the laws we administer. For example, last year we commenced proceedings against the holder of an Australian financial services licence, where we allege the licensee failed to meet its licence obligations because it had not implemented adequate policies, systems and resources reasonably appropriate to manage the risk of cybersecurity and cyber resilience. Of course, the licensee obligations are not the only avenue where law enforcement action might be available to us for failing to properly address cyber risk. And we do incorporate a consideration of cybersecurity matters in our assessment of whether or not firms or people are complying with the laws we administer. We also apply our enforcement skills to take action against cyber misconduct. So, for example, we've been involved in a joint investigation with the AFP, which identified and disrupted a sophisticated cybercrime syndicate suspected to be responsible for frauds and attempted frauds totaling more than 25 million. This occurs, we say, through exploiting weaknesses in cyber controls in companies, which allow for the compromise of client identification information establishing fake share brokerage, superannuation and renewal bank accounts. One of the alleged key onshore syndicate members has been charged in this matter. In another example, a conviction was obtained for insider trading in a situation where a trader hacked into the computer network of a financial publisher and obtained inside information, namely unpublished buy recommendations for listed stocks. Now, in relation to our expectations of auditors, we do expect auditors to consider the potential impact of cybersecurity risks on an audit. And we note the AUASB bulletin, the consideration of cybersecurity risks in an audit of a financial report, which was released in May this year. And this assists auditors to consider the direct and indirect impact of cybersecurity on the auditor's financial report. Now, I know that Rodney is going to separately address the bulletin, so I'm not going to steal his thunder by speaking about it further, other than to say, if you're not familiar with it, I recommend that you take a look at it. So, cyber resilience is critical to firms. Addressing cyber resilience makes good business sense, and it is also very likely to be part of a firm's legal obligation. This is particularly the case for directors of companies dependent on digital services and for firms that provide critical market infrastructure or hold financial service credit or similar licenses. And just by way of real life example, let me quote from the report issued by our counterpart across the Tasman earlier this year. This was a comment on the impact of a distributed denial of service attack, which shut down the New Zealand market over a number of days in late August 2020. The regulator said a DDoS attack was foreseeable and that an attack of significant magnitude to take down the service was at least possible and should have been planned for. So let's all get planning and make sure this is a risk that is well managed in our businesses. So over to you, I think, to Rodney now.
Thanks, Kathy. And welcome everyone. So certainly that was a great grounding in the risks for businesses around cybersecurity. And as we all know, we need to consider the business risks when we're planning for our audit. So I'll just take you through a few of those considerations. And as Kathy said, refer to some of the AUASB deliberations and guidance that we've put out. So firstly, just building on, I guess, the broad focus on cybersecurity risk, and some of this has been addressed by Kathy earlier, but we're certainly seeing that the board of directors are being increasingly expected to have an understanding of the business implications of cyber risks, the strategy and the governance angles that Kathy referred to, and we're seeing a growing list of regulators actually asking directors to sign off on their cybersecurity controls, particularly when they're in areas of critical infrastructure. Regulators, as we've just heard today, are highlighting the importance of the issue and the expectations on businesses. To go a little step further, we're seeing that investors are asking a lot more of the entity's cyber risks, and customers are really wanting to understand what's happening with their personally identifiable information and how that's being managed. And that sort of increasing risk disclosure that we're seeing in financial reports now, either as a consequence of questions from regulators, investors or customers, is really starting to require the auditors to have a greater understanding of that, given that they also need to be aware and consider the other financial information that accompanies the accounts. We're seeing business partners want to understand more about what entities' cyber risk management capabilities are. As we've seen over time, the digital transformation in the sectors that we work in means that far more of the business operations being outsourced to third-party providers. The connectivity is greater. That brings a lot of fantastic opportunity for businesses, but it also brings some risks. And this is all about managing the risks while embracing the opportunities. And we're seeing audit regulators more and more asking about this through their inspections of audit files, particularly when you see that there has been a breach and how that's been addressed. So this sort of broad focus on cybersecurity risk and all the stakeholders in the entities that we're auditing does then come with some responsibility for us as auditors. So we're just going to sort of step through these key areas. This is sort of the content that is addressed in the AUASB bulletin on cybersecurity, which I'll talk to again later, which was really about providing guidance to auditors. But if we start with that primary purpose, that we are required to obtain an understanding of the entity, the risk factors, and that includes cybersecurity risk, like all business risks, and assess whether those risk factors represent a risk of material misstatement to the financial statements. Primarily, you would start with probably a presumption that the risk is low. And so a lot of this is actually about obtaining the evidence you need to document why that would be the case. We are responsible for opining on the financial statements, so not the enterprise-wide cybersecurity control. So we need to make sure that any of our communications around that are quite clear, much the same as any of our discussion about internal controls. Where there is a risk, we do need to actually then design and perform further audit procedures in response to that assessed risk. There is also obviously the considerations around fraud and non-compliance with laws and regulations, particularly when there has been a breach and private information has been disclosed. So those are further standards. And of course, the need to regularly communicate with management and the audit committee. So you'll see that really there's a whole broad range of auditing standards that do require you to think about cybersecurity on the way through. And that is really the purpose of the AUASB bulletin, to help auditors to frame their conversations with clients and their thinking through the audit process. So if we then just sort of delve a little bit deeper into what is the risk assessment strategy that we have to consider for cyber risks. So I would recommend the first thing we should be doing is obtaining a high level understanding. And it does start with inquiry. I think that's going to progress in time. But we certainly need to understand each of these areas, particularly how the entity is governing their cyber risk program, maintaining privileged account access, which I think Ben's going to talk a little bit further about later. Security monitoring and incident management, I think, is really important. One of the things that you hear time and time again with cyber security is this concept of what's called dwell time. And that is that often bad actors have entered into systems and are monitoring, collecting information, maybe making changes to the system. And it's some period of time before the entity actually monitors, detects that, and responds to the breach. So one of the things we need to be aware of, that when we actually do find out about an incident, that may well be well after the start of the incident had occurred. Threat and vulnerability management is critical to all of that. So how are organisations ensuring they're across that? Patch management, each of these items you can see and read. One thing I'll point out here is that some of these are intimately linked to the controls that we may already be considering, particularly if you're relying on IT general controls. So there is some synergies there. The risk with cybersecurity is that access may be through non-financial systems that are linked, so operational technology that is then linked to the financials. So it is a broader perimeter that we need to consider, whilst we are primarily concerned with what the impact is to the financial statements. But some understanding of the footprint that clients have on the internet, I think, is important to absolutely understand the risk. Some of the more important parts of our strategy for the audit is really when you do have a breach. So once a breach has been identified, investigated and reported, what is our response? And I'll talk a little bit to that again shortly. So investigating breaches. The first step in any breach is to understand, well, they say the who, the what, the when, the where, the why, and the how, so you really can understand those. Arguably, who and why may not be that important. Often you can't detect who that is and what their motives are, but certainly how they've entered into the system, what the breach was, what they've done, when, and where they might have gone throughout the integrated set of IT systems is important for the auditor to understand. They then need to understand how that might affect the financial statements and evaluate the effect of that on the audit procedures. So why is this important? Well, in order to assess your response and what the risk is to the financial statements, I think you need to understand, what did the cybersecurity event result in? Was it extracting protected or sensitive information? Often you see that credit card details and the like is one of the more common examples. And that could lead to a number of implications for the company that we're auditing. Most notably, fines and penalties for breaching those data integrity measures. But it could also lead to impairment of assets if it has a significant impact on your business. If you had intellectual property that is dependent on your protection of that sensitive information, then there could be implications there that you need to consider. Did the event result in unauthorized loss of funds or assets? You know, we quite routinely see that when there's weaknesses in the system, that bad actors can, their primary aim there is to convince someone to remit funds to them in settlement of a liability, and they've changed the details of where that money goes. I think everyone's seen quite a few examples of those. I think one of the other ones that we need to be careful about is where they've actually accessed the systems and changed. If they get access to privileged accounts, what does that give them the ability to change within the system? And that can have wide-ranging effects for our audit. And then the last one is a key item, is the use of ransomware to interrupt the business operations. Now, that can have wide-ranging impacts, which could impact the financial statements either now or in the future. And so again, it's important to understand what could be the implications of those. I might just say that you know, one of the key things here is that when there is a breach, sorry, I'll just step back. It's important for the organisation to do an investigation. One of the recommendations we would have is that the audit firm should be trying to shadow that investigation and leverage the understanding that the organisation is doing there to understand what was the effect or could have been the effect, but also to satisfy themselves that there has been a thorough investigation. It's a complex area and one that we're going to see more and more guidance on, I think. The AUASB, as we talked about before, the technology project advisory group that I chair, the first publication we put out was this bulletin, the consideration of cybersecurity risks in an audit of the financial report. Sets out each of the audit obligations, gives some guidance and some examples, and is something that I would recommend that all auditors should read and consider. This is the start of a series that we will put out. We've also done some other things around data integrity, but I expect that cyber is an issue that's going to continue to grow. The considerations for auditors are going to increase, and so this is really the start of the AUASB communicating with auditors about how they can respond or should respond, and therefore, as things change, I think we'll see a range of bulletins in this manner. The other area of good, I guess, practice that I'd recommend that auditors do consider is the guidance from the Australian Cybersecurity Centre. There is a set of mitigation strategies that they refer to as the Essential 8. It's very much based on sound controls, and that's an area that I think auditors should be aware of. It does line up to the considerations I mentioned earlier, particularly in the area of patch management, management of privileged accounts and the like. So good sound management of those critical controls goes a long way to an organisation managing their cyber risks and their cyber threats. And therefore, if we have an understanding of how that control environment is being operated, that gives us better information for us to be able to assess the risk of misstatement from cyber threats. I think because it focuses on controls, it's also an area that, whilst we often hear that auditors are a little bit concerned about talking about cybersecurity and don't feel they have the knowledge, I feel that when we're talking about internal controls, IT general controls, other IT controls of a similar nature, it's a more natural place for auditors to start. So I fully recommend that that people click on these sort of links to go to the Australian Cybersecurity Centre, read the guidance. It's not that extensive; it's quite summarised, so therefore it's an easier read. I think it's also a great initiative that government regulators are working with business to try and all come together to increase the cyber resilience of our important entities and the financial systems we're operating in. With that, I'll pass to you, Ben, to go into a little bit more detail about some of the implications for the audit arising from cybersecurity.
Thank you, Rodney. Okay, so my presentation today will follow on from Rodney's presentation. I'm going to be talking a bit about responding to cybersecurity risks as relates to audits of financial reports, but I'm going to be offering some practical perspectives. During my presentation today, I'll be talking about changes that I'm seeing here within the public sector here in Victoria that are causing us to refocus on cybersecurity, the downstream impacts of such risks on our audits of financial reports, potential responses to these risks, and the role of general IT controls in responding to these risks. Okay, so in this next slide, I talk to some of the things that I'm seeing different, or some changes that I'm seeing across the public sector. The first dot point relates to the move to cloud providers. Look, I think it's fair to say that cloud is not new. I guess what is less so well known is that there are 3 variants of cloud. And what we are seeing many agencies do is that they're not only choosing to outsource the provision of IT infrastructure to third parties, but they're going a lot further. They're outsourcing a lot of processes that were once managed in-house. In the IT space, this is known as software as a service. The second point is somewhat connected to the first, and it's quite transformational. With agencies moving to cloud providers, we are seeing that processes and controls that have been traditionally managed by IT teams are now being transferred to other business areas, such as the finance team. Now, how these business areas then choose to design and operate these IT controls are sometimes quite fundamentally different from how traditional IT teams would manage, say, things like change management controls. The third dot point relates to remote working and a concept known as proliferation of shadow IT. Shadow IT refers to the use of private devices and applications to undertake your work. So, be it a private phone that you might use to check emails, or even your own personal laptop that you might use to log on to the office accounting system. This has been aided in recent times by more modern accounting systems, which actually allow you to access the accounting system via a web browser. Gone were the days when you need to be on an office computer in the office to access such systems. And look, unlike a work laptop, your private devices may not have the same levels of protection. They may not have the same levels of antivirus. They may not have the same best practice firewall settings and other security features. Now, as a very basic example, malware that logs keystrokes on an unprotected device could well be used to compromise a corporate environment. My last dot point here relates to the proliferation of internet-based services. What we're seeing here is that within the public sector, there are a lot of agencies that are increasingly using websites to collect and process information from the public. And I guess even opening up a small part of the system to a public-facing website brings into play a whole new raft of risks that you might not have previously had to consider. And examples of these risks include things like SQL injection, cross-site scripting. These are very specific to websites. I'm not going to go through them in detail here today, but if you're after more information, I encourage you to look at a website called owasp.org, so spelled OWASP.org. So look, as I step back, my mind turns to, well, how do these risks then potentially impact on my work as a financial statement auditor? And I reflect on what's important to us. As IT auditors supporting audits of financial reports, you know, I like to think that we're more focused on concepts such as the risk of material misstatement and the work that we do to support the audit opinion, which is eventually issued. So we're more concerned with factors relating to materiality, unauthorized changes, and underlying data integrity. So the question for me is, how do we go about responding to such risks? So as I think of the different cybersecurity risks, the thing that jumps out to me is that these different risks that I've just mentioned earlier, and that Rodney's just mentioned earlier, and Kathy's just mentioned earlier, have very similar consequences as it relates to financial reporting. They either result in unauthorized payments, inaccurate financial reporting because somebody has chosen to override a control, or maybe the inability to produce financial reports because of data losses or denial of service attacks that, you know, Kathy referred to earlier. Now, there are others. These are about a few that come to mind. As mentioned, financial statement auditors, we're more focused on concepts to do with risk of material misstatement. And for me, many of the entities we audit already have monitoring and application controls in place already. So for me, a logical first step would be to examine what IT and non-IT controls our audit clients currently have as a starting point. In the example on my slide, controls such as monitoring of budgets versus actuals may be more effective at reducing the risk of an external person or external actor making an undetected unauthorized payment, but such controls may be less effective at reducing the risk of someone internal to the organization doing the exact same thing, especially if that internal person are the same folks that produce your internal controls or the reports. As mentioned earlier, it's difficult to generalize, and you should consider the facts relevant to your own circumstances in your own audits. In the last part of my presentation, I'm going to be unpacking how general IT controls play an important role in this space. So firstly, what are general IT controls? General IT controls effectively reduce the risk of unauthorized access and unauthorized changes by privileged users. And I'll talk a bit more about this later on. But what I will reflect on in this slide is that the February 2020 release of ASA 315 provides a lot more detail in this space than previous standards. Appendix 6 goes through in detail common IT risks relevant to 3 key IT processes, being managed access, managed change, and IT operations. And it also details the controls you expect to find to address these risks. I won't go into detail in my presentation today, but I encourage you to look at the February 2020 of ASA 315 if you're after more information. So just go to the next slide. Just bear with me. Okay. So in this next slide, we look at why are general IT controls important. For me, general IT controls are important as they reduce the risk of unauthorized changes relating to certain reports and automated controls that you may have relied upon as part of your audit. So example of automatic controls might be financial delegation controls or workflow controls to prevent a person from creating and approving their own transactions. In reports, these might be things like reports you use to do your monthly bank reg. But beyond that, general IT controls also complement input controls in reducing the risk of material errors resulting from unauthorized changes to data after they've been entered into the system. So in this next slide, I go into how general IT controls complement input controls to reduce the risk of material errors resulting from unauthorized changes to data after they've been entered into a system. And as a starting point for most audit client staff would typically access data via an application such as Finance One or Oracle EBS to do their day-to-day functions such as creating purchase orders, entering an invoice, etc. The application itself stores no data. All the data is stored in an underlying database, and together the application and database is stored on a computer network. The important thing to note here is that there are different ways of making changes to data beyond just going through the application itself. For simplicity, I'm going to be referring to these different ways of making changes to data as a backdoor. So the backdoor can be via access to the application, by privilege access to an application. So rather than going through the normal ways of accessing an application, you use your privilege access to make changes via the application, or you can go direct to the database and make your changes there. Now, there are more sophisticated ways of making changes to data beyond this, but that's beyond the scope of this presentation here today. The last thing that I wanted to cover as part of this slide is the difference between application controls and general IT controls. For me, general IT logical access controls help reduce the risk of logical access. So reducing the risk of unauthorized logical access to your application and to your database. Application controls, on the other hand, reduce the risk of authorized users using their normal user access, making either intentional or unintentional errors. So application controls authorize users using the normal access, whereas change controls reduce the risk of authorized users causing errors with their privilege access. So as I mentioned earlier, using their backdoor access, if you like to call it, to make changes direct to the database or to the, via the application itself. So in my last slide today, I'm going to talk quickly about some of the reasons why we see IT general controls failing. The first one for me is the lack of system-generated logs. It is difficult to conclude on the effectiveness of logical and change controls without logs to support these changes. You can have a change register, but without logs, it's difficult to confirm, attest to the completeness of those change registers. The second point relates to the lack of adequate assurance being sought from third-party service organisations and weaknesses in user entity controls when organisations do choose to go to third-party providers. As mentioned, user entity controls are those controls that cannot be outsourced to a third-party provider. These are things like reviewing of user access by your staff, your audit client staff. Service organisation controls are those controls which are managed by a third-party cloud provider. So that's all from me today. Thank you for your time, and I'm going to hand over to Claire. Claire?
Thank you so much, Ben. That was fabulous, and Rodney and Kathy. If you'd like to all turn your cameras on, then we will have a panel discussion. We're going to go until 2:10, just so all of the attendees are aware, because we did start 10 minutes behind time because of our technical issues. So I hope you can stay on the line to listen to the responses to your questions. Now, we did have one question come through, which I see, Rodney, that you did answer, but it did highlight, and you might just want to touch on this briefly, Rodney. The attendee was asking about what to do in the case where an audit client has extremely low Essential 8 maturity. So I'll pop the link in there to the ACSC's Essential 8 guidance on mitigation strategies, but maybe if you'd like to say a couple of words on that one first of all. Thanks, Rodney.
Thanks, Claire. Yeah, this is a pretty common occurrence, particularly on small to medium-sized enterprises that don't have large IT budgets or teams. And I would start, by considering our role as a trusted advisor to the management team and to the board in particular, often they don't know what the risks are. So us alerting them to those risks is the first step. They often don't know where to start. We see a lot of entities where the IT team's talking to the finance team and they're not being able to resolve what's the right and appropriate path forward. And so there's a lot of uncertainty. So I think as trusted advisors, we've got a great opportunity to assist our clients through this to improve their environment. So certainly, I think alerting them to the risk, helping to guide them on what would be the appropriate controls. You can advise them on they need to improve their control environment, refer them to things like the maturity models to help them to find their way through the improvements in the system. But then secondly, in terms of the response for us as auditors is, clearly this would be a heightened risk environment for us as auditors. I'd analogize it to what would we consider to be the risk of fraud in an entity with no internal controls over their finance systems. We'd be thinking that that would be a higher risk client. We'd need to be alert to that. Similarly here, I think you'd have to be alert to higher risks of cybersecurity attacks and that they'd go undetected. And therefore you'd need to be very alert to that and working through that in your audit response, which would be challenging.
Yeah, thanks very much, Rodney. And it makes me also think, what possible consequences there could be. And perhaps, Kathy, you could give your thoughts on, where cybersecurity is not well managed within businesses. I mean, you did touch on some cases which maybe, already illustrates this, but, how bad can it be? What could be the worst case scenario in terms of the consequences of poor cybersecurity?
There's probably quite a few, examples of awful consequences from poor cybersecurity. We saw Ben's probably going to know the title better than me, but I think it was in 2007 we saw the Not WannaCry situation, which impacted on some of the health agencies in the United Kingdom, for example, and they weren't able to access key medical records in hospitals and those sorts of institutions. And I think a number of key infrastructures in the Ukraine were impacted by that one. And there's been obviously more spectacular things since then, but that one strikes my mind because I was travelling on a cybersecurity conference at the time, and I recall that my fellow travellers, many of whom were working as chief information security officers in some significant government agencies, just as soon as they heard about it, scrambling to make sure that it wasn't something that had impacted them. Look, from my perspective, one of the things that's really clear is that this is a rapidly evolving area, many sophisticated actors in the area, and the most important thing is having a plan. It's not thinking, obviously it's critical to have controls and do what you can to avoid these issues, and the Essential 8 is a good pathway to address that. But it's the most critical thing is having a plan to recover and respond. And what we really get concerned about is the failure, where there is an intrusion or there is an issue and there's a failure to actually take steps to prevent that happening again, and really learning from the bad experience. And I think it's really critical, and it's a role that auditors can really play, is highlighting when you see a controls failure, which will mean the bad history likely to repeat itself. I think that's a really important area.
Yes, so definitely learning from mistakes or experiences at least that have occurred. Yeah, that's great. So I was thinking, Ben, I wanted to pass over to you and just see what your thoughts were on whether you've seen sort of increased cyber threats during COVID-19. There's been such a big change in the way that entities operate.
Yes, thank you, Claire. I think I reflected on earlier in my presentation that with people now working more remotely, we are seeing a lot more instances of what we call shadow IT. That's where folks are using their own personal devices to access things like home email or even the Office ERP. Yeah, and I think that in itself introduces new elements of risk. You know, your home computer might not be as well protected as your office computer. You may not have the most up-to-date antivirus definitions. You may not have the best practice firewall settings. Your 12-year-old son might have been playing your home computer. So, you know, and I think, you know, at a very basic level, if you have, you know, corporate systems that are accessible via a web browser with just a username and password, you know, being able to access these systems by a home device introduces these new risks. Yep, so that's just one example.
Yeah, and sometimes I know I've had the experience where you're having trouble at home with your IT and yeah, trying to get that fixed without, you know, giving up passwords and things like that can become quite challenging. So, Rodney, I just had a question for you. Do you feel that perhaps technology is moving faster than companies who are adopting those technologies have the ability to manage, you know, the accompanying risks? We're taking on, you know, so much new stuff all the time.
Yeah, I do think that is the case. I mean, we're seeing an increasing focus around how a company's governing digital transformation projects, and there's issues in those. So, like, you know, if you go back many years ago, everyone's got horror stories about implementing ERP systems and the challenges that go with that. We've had similar instances around all sorts of digital transformation, but they're all moving at speed. And as Ben said, they're now in the cloud, they're third-party providers, you've got other stakeholders. So that is moving very quickly. But I think also we're seeing the emergence of other technologies like AI and like blockchain. And companies are piloting those, but it's taking a long time for them to embrace them and use them more extensively. So I think the technologies are there, companies are trying to catch up, and there's a lot of demand from people in the business to move more quickly, and that's putting a lot of pressure on IT departments and finance departments to enable that change, but to do it in a risk managed way. And I think the approach to risk management is changing quite starkly as well. You know, the old days of just lock down the code so no one can access it was how we managed IT risk many years ago. Whereas now a lot of the new technologies, you can't lock the code down in these systems. They're open to enable, you know, faster ways of working. And so there's a whole new set of risks and a whole new ways of managing IT these days. Agile, for example.
Yeah, right. And I might just go back to you, Ben, on that point. How deep do you think that the auditors and their clients' understanding of all the new technologies needs to be then when it's not all controlled centrally anymore? And how much understanding they need to have around the cybersecurity?
Yeah, thank you. I think it really depends on their role. So, you know, if you're an audit, say if you're an audit manager or an audit director, I think it's better to have a wider understanding across the technology stack rather than an in-depth understanding in certain areas. You know, I think there's just so many tools and different technologies these days that it's difficult to be a specialist in everything. What is, however, also important is the ability to then research. So if there's an issue in a certain area, that ability to then explore it a bit further. So I mentioned a bit earlier in my presentation that a lot of entities that we audit are now using web-based services to accept and process information from the public. So then you might hop onto the OWASP website and being able to you know, to research what you need to do there. So it really depends on the role you play, but I think as auditors, it's far better to have a broader understanding across the technology stack as a starting point.
Yeah, thanks, Ben. So I just go back to you, Kathy. You were talking about earlier on about some case studies of cyber attacks. When does ASIC actually intervene? When is cybersecurity relevant to ASIC's activities? And when would ASIC take enforcement action, for example? hang on, you're still on mute.
Can you hear me?
Oh, that's better. Yes, great.
Yes, sorry. It's relevant to our activities in a range of situations. I mean, and so it does. The answer might be it depends. But we are very keen, if we're talking about something like market infrastructure, the payment system, and obviously the Reserve Bank has a role as well, but we want to know right away. We think that, you know, we need to know straight away. We need to be able to ensure that we're doing what we can for the financial system to operate as well as it can, allowing for that sort of situation. There may be, in fact, many companies who our attitude would be, we need to know, or the market needs to know right away. And it really does depend on the nature of the company and the organisation. But we certainly expect to know. It doesn't necessarily mean that it's a situation that needs to be made public, but we're very concerned to make sure the system can continue to operate, that investors, that consumers are protected as best they can be in the circumstances. And we think it's our job to work in partnership with the firms who are impacted. Obviously, you know, the first thing we do, if they haven't already done so, is put them in contact with the ACSC to ensure they get the assistance and there's the information sharing that's needed to deal with that matter. One thing on that, I think companies often don't really test how they're going to deal with a cyber issue. They say they do, but I don't think they really do. And the reason I know that is I sort of know it from our own experience. We had a situation where a vulnerability was identified in an Excelian apparatus that we used. And of course, the company let the people who know about this vulnerability and the need to patch, and I think that's about, some ridiculous hour Australian time on Christmas Eve. And so we had a near miss that took us a while to work out that there were attempts to infiltrate and obtain information, but they weren't successful. But it was a near miss. And to go through that process, you have to think about how long is it going to be before we're absolutely sure we've had a near miss. In our case, it was quite a bit of time. So who do you need to know? Who do you need to notify? And this was potential personal information of folk. And so we needed to quickly get to the key decision making about who we needed to tell, what we needed to tell them, what was the appropriate level of transparency, what constructive things could we tell them to mitigate the risk, all of that sort of thing. And until you've had that experience, or you've really war-gamed the experiences, you're not going to be as well prepared as you'd like to think. And so I really encourage people to do a lot, real war-gaming of these matters, and particularly with their senior folk, because when you have a crisis, the senior leaders of the business want to be involved in the crisis, and if they have never attended, the wargaming or the crisis management, it's pretty hopeless. So I really encourage people to push that.
Thank you very much, Kathy. Now we have hit 2:10, so I need to bring this webinar to a close, and I'd like to thank you all very much, Kathy, Rodney and Ben, for the great information that you've shared with us today, and it certainly provides me with a lot of food for thought, and I think provides everyone with practical steps in considering the impact of cyber risks and the outcomes of any cyber attacks on the business, and in turn, what the impact is on the audit. So thank you very much. Our appreciation for your time, Kathy, Rodney and Ben. Now, to wrap up the webinar, I'd like to hand back to Michael. Thank you.
Claire, thank you very much. I'd like to thank the panel for presenting on today's topic. Great to have you here. Thanks everyone for your patience. Really, for your patience was terrific. Thank you very much. That brings us to a close. I'll ask the panel to go ahead. You can stop your videos there, pop yourself on mute. Just to let you know that there is a bit of a feedback form that pops up when the webinar closes down. Please take the time to fill it in. I know the panel would be more than happy to have any feedback from today, as would CPA Australia. Thanks again, everyone. Enjoy the rest of the day. We look forward to seeing you next time. Take care.